All right, guys. Good morning. Thank you so much for joining. Today is June 5th, 2024. This meeting is for our LJ Realty team. And let's get started with our interest rates. Interest rates are hovering around 7.03 according to Freddie Mac. And according to your Mortgage News Daily, they came down a bit. So last Wednesday, we saw this as 7.34. And today's meeting, we are at 7.07. So they came down a little bit, right? That's a good sign. But overall, if someone asks you as a realtor, hey, what are the interest rates these days? You should be able to say that they are around 7%. Okay? Your client may get a little bit lower if they buy down or a little bit higher depending on their credit scores or how much down payment they're going to put down, if it's going to be an investment property or what type of loan they're going to get. Okay? But your answer should be the interest rates are around 7%. Okay? How long they've been around 7%? For about a year now. We have seen where they went up close to 8%, came down to maybe 6.75, but they're averaging around 7. Okay, as long as we have an idea that they are around 7, we should be able to answer our client's question. Okay. So now I want to give you a scenario for affordability where a client may want to go with maybe one family, and then all of a sudden they might say, hey, no, Sclaren, show me a two-family as well, because my loan officer said that if I can get rental income from the second floor, they can add that towards my income, right? So this is without counting any income, rental income. If a client comes to us or another loan officer and their household income is $95,000 and their down payment is $75,000, because they're preparing themselves to be a homeowner and they're taking care of their monthly debt, they only have about $100 monthly debt. That's definitely on the lower end. Okay. Today's interest rates average 7.07, property taxes $5,000, and property insurance for this property $1,500. So if they were to go with 49% DTI, their debt to income ratio, they should be able to comfortably buy a house that's going to be around $558,000, right? So we know that you can't find a two-family with 558. Heck, we have hard time finding a single family for that price. So at 54%, now you know if they're going with 54%, they're going with the FHA loan. If they're going to go with the FHA loan, then they can qualify up to $617,000 for a single family. Okay, that's a very normal scenario that we may have. But the same client might say that, hey, the second floor is going to be rented out. So how are we going to calculate that? So the home buyer wants to buy a two-family property. He wants to live on the first floor and he wants to rent out the second one. And the second one is bringing in $3,000. Maybe it's 3 bedroom, 2 baths, whatever the case might be. They're projecting that it's going to be $3,000 per month. So the lender is not going to use that whole $3,000. They're going to use 75% of that. Okay, so if it's $3,000 per month, the lender will use 75, which gives you $2,250. So your rent, that the rental income that they will count is going to be $2,250. You times that by 12. So the rental income, if they're getting $2,250, which is 75%, you times that by 12, you get $27,000. So guess what? We can use this $27,000 as their rental income towards their income and qualify them for even a larger property. So before we had 95,000, we're going to be adding this 27,000, right? Rental income. So now we can count their annual income as $122,000. Everything else remains the same. We did not touch anything else below this, but just the income has increased. How about the home prices now? If they're going to go with a conventional loan up to 49%, they can get a property for $722. Or if they go with FHA, they can get a property close to $800,000. Right? Are you able to find someone a property for two-family property for $800,000? You should be able to. Right? It's not going to be a brand new building. It might not have 3 bedrooms, 2 baths, fully renovated. It might be a little beat up. It might be a little old. Might have a shared driveway. But guess what? This client was initially looking for a single family. For a single family, they qualified up to $617 because they were making $95,000. Now with their $27,000 income added as rental, now they can qualify up to $800,000 for a property. So even though they're going with the FHA loan, we have done a couple of deals that was in this scenario where, they initially thought that they were only going to get a single family property, but adding the rental income. So you need to have that conversation with your clients that, hey, you maybe don't have a co-signer. It's perfectly fine. But let's see how much you would qualify for a 2 units instead of 1 unit. Okay. Any questions on that, guys? Okay, this could be for yourself. Maybe you're looking for a single family. You might want to look into a two family as well, see how much rental income is going to bring. One common question that we get is that this $3,000, how about if it's 2,800? How about if it's 3,100? The bank will do a appraisal, a rental appraisal on that too. So, the appraiser is going to check out what the rental income will be for that property. So it's not what Saab says or Carvin says, but it would be what, the lender's appraisal says. Okay. So we have done deals this way. So I just want to encourage you guys and encourage your clients always, if you see a pre-approval for a single family, ask them, hey, I'm okay with you showing you one single family, but also let's look at two family as well. Okay. So when it comes to loans, guys, right, we have QM loans. These are qualified mortgages. Then we have non-QM loans, right? These are non-qualified mortgages. We have FHA and conventional, and some people get confused. So I want to make it really easy for you guys to understand that if someone is telling you, when we say non-QM, it does not mean no income, right? So even in non-QM, there are some income loans. So we want you to know this way, if your client is telling you something, I want you to be knowledgeable of QM and non-QM loans. And the question that we want to answer is that, hey, can we get a FHA loan and that's going to be non-QM? And you guys tell me if we can answer that. To start off with, first I want to tell you guys what is a QM loan. This is what a loan, a typical loan will be, meeting the guidelines by that. Those are set by your Consumer Financial Protection Bureau, which is CFPB. They're the one who's handling all the financial guidelines since 2008. Okay, so what they're trying to say is like, hey, if you're making $100,000 per year and your debt is $25,000, you should be able to pay back that loan, right? So the government set these guidelines to make sure that, hey, you have the ability to repay. Very simply put, so if you're working as a W-2 employee and you have a steady job, then you're gonna go with QM loans, right? They're simply looking at your income and they're looking at your debt and saying that, hey, you should be able to make this mortgage payment because you're making enough money, right? Those are your qualified mortgages, QM. Then you have your non-QM. These are the ones that does not have any limits. Your lender, right? Each lender will have its own guidelines. So there might allow you to say, instead of doing 49% DTI or 54, they might say, hey, well, let's do 55% DTI. Even though on paper you're telling us that you're not able to pay back, but because of your assets, because of your credit scores, we should be able to give you you should be able to buy a bigger property, a higher price property. But guess what? With non-QM, you are going to pay a higher interest. Why is that? Because you are a higher risk. You're not going with QM loans, you're going with non-QM, so you're going to pay higher interest. How much higher? Is going to be typically between 1 to 2% higher. So if today's interest rates are 7.07, we should be able to give them a non-QM loan for below 9%. It might be 8.5, really depending on their scenario. Okay. Next, guys. So if it's a good option for a W-2 employee, right? Person who's been working for 2+ years at the same employer. It could be a small company, it could be a big company, it does not matter, as long as they've been working for 2 years. Some people do change jobs. As long as you're in the same field, we should be able to count your employment from the previous employer as well. So if you are a W-2 employee, you getting your W-2 pay stubs, and you have making payments, you have your tax returns, then you're going to go with QM loans. That's what majority of the people go with. Then you have your non-QM option. This is going to be for a small business owner. This is going to be for Uber drivers or any 1099. Why is that? Because they're not paying taxes to the fullest, or they're trying to have more expenses added, and then have their tax bill small as possible each year, right? So if it's going to be a FHA loan, think of it, FHA has to be QM. FHA loan is insured by the Federal Housing Admin, which is FHA itself, and which is part of your HUD, right? When we say HUD, this is your Housing and Urban Development. That's where they control make sure that everybody, all the loans stay under guidelines. So you want to make sure that if someone asks you this, hey, could I get a FHA loan that's going to be non-QM? No, you cannot, because every FHA loans have to be meeting the guidelines that are set by the HUD. Okay. And if it's going to be a conventional loans are your typical loans. This is where if we have a client, if Mr. Abbas, if you come to us and says, hey, my credit scores are 750, I make $100,000, and I'm looking for, my debt is very little, and you well qualified for FHA and conventional, we want you to go with conventional, right? In most cases, because you're going to be not paying any upfront cost as you would do with FHA, and your mortgage insurance will go away after you hit 20% equity when it comes to conventional. Okay, but just know that the conventional loans are not insured or guaranteed by the government. So they're typically backed by the private lenders. So some of us, when we look at the words Fannie Mae or Freddie Mac, all of a sudden we think that these are government, companies, or, these are government entities. They're not. They're government sponsored entities, meaning that the government have some guidelines towards them, but they're private. Okay, FHA, everything has to do with the government. Fannie Mae, Freddie Mac, they are private and they have their own guidelines. Okay, majority of our conventional loans will go through Fannie Mae or Freddie Mac. Okay, so conventional loans can be QM or non-QM. So you might question that, how could they be QM and non-QM? So let's go over that. Okay, so this is your typical conventional loan. Anybody that has a good credit scores above 620, they have down payment more than 5%, their DTI is below 49%, and the closing cost is going to be 3 to 5%. This is going to be a typical conventional loan, right? The higher the credit scores, the better interest rate will be offered by the lender. So if someone is coming in at 620, they might get offered an interest rate of maybe 7.25, versus if someone is coming with 720, they might get offered 6.99, right? Just as long as your credit scores are better or higher, you will get better interest rates. Okay, so this is what majority of the people will go with. And this is your non-QM. This is also a conventional loan, but this is your non-QM because this is not checking. This is a no income check loan called DSCR. We're only looking at the property. We're looking at the property and saying that, hey, we don't need to check your tax returns. We don't need your pay stubs. We don't need any of that. We just need to look at the property and see how much money is going to generate, right? What is the rental income is going to come from that property? So can it be for primary, right? Can you live in that property? Not in this loan option. So this is for investment only. So obviously you're going to be making the mortgage payment from the rental income that's coming in. So they want that rental income be coming in from third party and not from yourself. Okay, so you can rent out that place from day one, but this is going to be a non-QM loan, no income check, right? There are no tax returns, and simply looking at how much money that property can generate. Another non-QM is very popular. It's in the name. It has non-QM 1099. So instead of looking at your tax returns net income for your 1099, that's what a typical loan will do. So if someone were to go with this conventional loan and they were an Uber driver making $150,000 gross, and then net was only $50,000, and your loan officer will look at their scenario and tell them that for this conventional loan that they would not qualify for much because they can only count $50,000 income. Okay, but on this non-QM, out of that $150,000, we can use up to 90% of that. So all of a sudden your client will qualify for a much bigger property, much higher price, qualified, but we need to make sure that their credit scores, right? With this conventional loan, we needed what? 620. But now for non-QM, we need 100 points more, basically 720 or above. There are some cases where we will allow them to, maybe the lender will allow them to go a little bit below, maybe 690, 695, 7, but the higher the credit scores, the better interest rate and the terms they will get. And this down payment, right? This may increase as well if your credit score is on the lower end. So just know that there are QM options, non-QM options for your clients. They need to go to a loan officer that can give them all the options. Okay. So just know that there might be reserves needed for this. So if you're going with a conventional loan, there's no reserves. The bank is saying that we know you're making this much money consistently. We know that you should be able to make your mortgage payments. So we're not worried about you. You're less risky. But here you're more risky, right? Because this is a non-QM 1099 program. They want to have some cushion to make sure that you are able to make those payments if things go look south for you. So if you're putting down 20% down payment, then you need 6 months of reserves. So what are these 6 months of reserves? So whatever your monthly payment is, times that by 6, that much money should be held in your account just for emergency and to make sure that you are able to make payments later on. But if you were to put down 25% down payment, then you do not need any reserves. Okay? So have your client come to our office if needed, or even go to anybody else they want to and just see what their options are. Right? Do not discourage your clients who are Uber drivers or Lyft drivers, business owners, and 1099 general contractors. Even look at your last years. You guys got 1099, right? So let's say you made $80,000 as your commission. Maybe after all the expenses, you brought it down to $30,000, right? Now we can look at that $80,000 and use 90% of that to qualify you for this type of loan. Okay, so I'm giving you a different example so you guys can understand that, hey, this loan fits in a lot of different people. So you got to have a conversation with them. It's like, hey, maybe you're not qualifying. Maybe you're looking for a co-signer. You're not able to get someone solid. Why don't you go with non-QM option? Okay. Again, the interest rate is going to be 1 to 2% higher than your regular conventional loan. Okay. Any questions, concerns so far, guys? But these are all great programs. Should be able to close quickly with them. So let us know if any of your client needs any of that. Okay. All right, guys. Next, we have your KV Core dashboard. In KV Core, guys, I want you to have a habit of checking your activity on daily basis, right? So this way you can stay in touch with your clients and respond to them in a timely manner. Some of these guys, Saab, you happen to be here too. Some of these guys will message you directly from, returning your message right from 516 number, our KV Core number. Anytime you get a message from that, it's a smart number, so it will be directed to you guys. Okay, some of you guys want to use your cell phone to communicate, it's perfectly fine. But just see, if you're going to use KV Core's number, the smart number, as long as they're in your database, you will get a response from them and it will come directly to your CRM. And what I used to do is just take some action on it. If someone saw a property, I just want to connect with them. Hey, could I show you the property inside? Right, the conversation should not be more than 20 to 30 seconds. If you're going to dwell on something else, that's perfectly fine. You just want to get to the point. Like, hey, there's a new property available. It seems like it's a good, fit for you. Could we judge it by looking at inside? If we see it inside, and then your client will automatically say, hey, yes, I want this property, or I don't want this property. And please do not judge your clients, right? They're about to make an offer. You're not. Right? We're just a middleman. So if they like the property, they will be all over you. But do not try to sell this property if they're not happy with it for whatever reason, right? It doesn't check off all the boxes, or they just have that gut feeling. They're going to live there, not you. So always think for best for them, however we can help them out and let them, whatever decision they want. You love the property, they don't, move on and show them another property that they might like. Okay. The last thing that we want is like, hey, this client, this agent was telling me, hey, all these positive things about the property, even they were misleading, right? We never want that. So make sure that you're on their side. But in KV Core, guys, out of 70 agents, we have 50 seats. So 20 people are not using KV Core at all because they're simply hanging the license. But if you are not able to log in, or whatever the situation is, I need to know that. Just send me a message and I can make sure that you have a seat available. Okay. Another feature in KV Core is called Marketplace. So you should be able to get, boost your business in different formats. There's some people who are listing agents that's using Property Boost. Some people love it. Some people say I don't receive much results. So it really depends on your, criteria and see how much you want to push your advertisement. But in KV Core, from bottom, the third tab there is called Marketplace. One of them, one of the features that I really like was this mail, voicemail drop, right? Maybe out of our 70 agent, maybe 5 of you guys can try this, 10 of you guys can try this and see how that goes. So you have a database. You don't have the time to call all of these agents, all these clients, I'm sorry, and follow up with them. Maybe you can send them a mass voicemail that's not gonna even ring the bell for them, right? There will be no ringtone or anything like that. Automatically will be a voicemail, right? So I think it's a good tactic. Not every agent is going to be using this, but anybody that's really want to follow up with their client, this might be a good option. So first you want to determine which clients that you want to send these voicemail to. Number two, you're going to record your voicemail. And number three, you want to engage, right? You're going to follow up with those clients and see if they actually responded to you or not, and start showing them the properties if they're available. We are trying to wake up the dead people by these voicemails, right? Because you're not going to call all your everybody from your lead or your database on daily basis, right? Maybe you see that, maybe you can filter that out. Hey, I have not spoken to these people in last 3 months, last 6 months. I want to send them, do a voicemail drop there, right? So it's a good feature. I highly recommend you guys checking it out. It's about $20 per month for 150 voicemails. Okay. So I think it's a good feature from KV Core. You guys can check that out. How do you have access to this? Through Marketplace in KV Core. Okay. Any questions, concerns so far, guys? Okay. All right, guys. Next, we might be reading some headlines, and just know that the interest rates, as we mentioned earlier, they're hovering around 7. They're going to be sticking around that rate for a little bit more while, maybe until end of the year. We really don't know when they will come down. When they do come down, there'll be a good news. But for now, I just want you guys to understand the fact that, hey, they're just like around 7% for quite some time. Let's just deal with it. Okay? So some headlines like, hey, Americans are nervous about buying homes, but they still want to, right? So we know that there's so many people out there who have been waiting for quite some time, and they might say, hey, even though the mortgage rates are high, I'm gonna go make that move, right? And you want to be part of those. And how about repair costs, guys? Right? This is a headlines that the buyers can overcome high home repair costs by planning ahead. Even if they're planning ahead in New York, guys, we know that renovations cost a lot, right? Majority of this is not just New York. This was the whole United States. You guys can see that remodeling, the most common things that they were talking about is the kitchen, is the bathroom, and is the roof replacement. Every time you're showing a property, every time, right? Just make a habit of asking the listing agent, hey, when was the last time the roof was replaced? When was the last time the kitchen or the bathroom was updated, right? The kitchen and the bathroom, you guys can visually see it, but the roof is always hard, right? So you want, obviously the home inspection will tell you, determine that, but why not ask at the showing, right? So you're a real estate agent. They're expecting that, question from you. You can ask the same question about the boiler room, right? Or the hot water boiler. If there's any appliances there, you guys can check the age for those appliances and make some notes for your client. Right, this is where we're going to be sticking out from the rest of the agents. So make sure that you're asking the questions that your client would want you to ask those questions. Okay. Every angle you guys can see here that even if it's a kitchen remodeling, it went from $46,000 to $72,000. These are on the high end, right? Some people say, hey, I'm going to upgrade the bathroom with $2,000. We know that that's not going to be possible. Or do an upgrade for a kitchen for $10,000. If you're going to be on the higher end, it's not going to be possible, right? So that's why when the investors are building a house, some people would want to use the cheapest stuff possible. You have to determine that when you're showing it to your client, hey, is this a quality of work, or does this, if they're asking for $1.4 million, for a property, what kind of appliances do they have? What type of, the floor it is? What type of tile are they using? Tiles? Is it wood floor? What type of flooring do they have? But you will have to be the one who's judging that, and you want to be on your client side. But you can see that overall, everything that you can think of for when it comes to renovation, the prices have gone up. Okay, so the best thing to do is that it doesn't matter if it's the roof, if it's the kitchen, the bathroom, the bedrooms, or the basement. You need to have at least three different quotes, right, for general contractors. So there are some general contracts that that serve different areas. So let's say you're showing a property in Hicksville. Look for local um, look for local general contracts in that area, right? And you can simply Google it, right? Read their reviews and see if you're comfortable. If you just go with one person, obviously you don't know how that rate is unless you actually compare it. So you need at least 2 to 3 different quotes. And general contractors are doing this on a regular basis. They have no problem giving you free quotes, right? You just want to make sure that you are able to get some quotes for your client when his time is needed, right? Because your client is relying on you when it comes to these type of work. Okay. Next, guys, inventory. Have you guys, anybody seen more inventory come on the market? Some areas we have seen it. Majority of them are still, we can still use more inventory, right? But they're saying that the home prices, the growth is not going to be growing at the same rate as it was. We don't care. As realtors, I don't not care about the price right now. All I care about is the inventory. If we have more inventory when the time comes for the pricing, I have enough tools to back my offer. Say, hey, I'm confident that, hey, my offer is solid because I know my market. But if someone asks you, hey, we have too much inventory, absolutely not. We do not have enough inventory in New York, right? I hope everybody agrees with that, because we have seen in South Ozil Park, in Elmont, Valley Stream, Hicksville, Franklin Square, everywhere, a property comes in on the market, is at the right price, it will go away quickly, right? This was a nice quote that you can have high prices or you can have high mortgage rates, but you can have both for long. But we have seen it for the last 2 years, guys. Higher home prices and higher home mortgage rates. Will that stay there forever? Absolutely not. It should not, right? Because the government is trying to control the inflation, which is fine. The home prices are not coming down because of the inventory. The home mortgage rates are not coming out because the Fed is not cutting their rates right now. They have promised that they would do it, or not promised, they said that they would do it 3 times this year. They have not done any of it yet. 5 months have been passed now. Let's see the second half, right? Just be prepared that when they do drop, your client is going to be ready and you want to take some action on that. Okay. So a lot of headlines for our commission changes. A lot of headlines for our, for newcomers, new agents, even experienced agents are saying that, real estate industry overall is not prepared for the commission changes, right? My question to you is that, are you? We can care less about millions of other, realtors out there. You should be thinking about yourself. Hey, am I prepared? Am I able to talk, have a conversation with my client about getting prepared, prepared to talk about compensation, right? So you want to make your commission. You have a value, right? You are a licensed realtor. You have to tell them that, right? You have to understand your value first. The first step is to quantify your worth, right? This involves understanding the market. If you have no idea how many properties were sold in South Ozil Park, which new properties are coming in the market, what is the lot size, if it's a 40 by 100, a broken up property, single family, what the value should be, or if it's a brand new property, 2 family on 40 by 100, what is the value there? That means you do not know your market, right? You just, South Ozil Park is where we're at here, but you should be specializing in different areas that you want to serve, okay? So you need to be special. You need to be specializing in your market and knowing the skills that, hey, I can actually help out my client in this market. On the other hand, maybe there's someone in Buffalo. Are you able to help someone in Buffalo? Absolutely not in most cases, because you have no idea what the market looks like there, right? So you're expert in some market, bring some value. So when you are telling your clients like, hey, when you're putting in an offer, you're going to be doing the research. You're going to save your client by having all the tools that you have in your pocket. Okay, your experience, your local knowledge, and your negotiation skills are going to be your a part of your value proposition, right? So your experience, your knowledge, and your negotiation skills. So first negotiation skill is the commission that you're talking about. If you're not able to negotiate with that particular client, how are you going to negotiate for them with the other listing agents? Right? If you're scared of saying that, hey, I need to charge you, to give you an example, I need to charge you 1.5%. And they said, no, I need, all I can do is pay you maybe 0.75 or 1%. How are you going to deal with that? That is part of your negotiation skills. Okay. You need to have some real life examples, right? So successful conversation discussion often involve education. Use examples to explain how your services can save clients time and money in the long run. Hey, Mr. Buyer, you're going to be paying me, 1% or whatever it is. I'm going to make sure that we build that in the offer. So if we are putting in an offer for 600,000, maybe we can put it for 585. I'm going to save you some money when it comes to your inspection, when it comes to your attorney, when it comes to your loan officer. I'm going to be guiding you all the way with these people, right? You need to have set some example when you're talking to your client regarding that, right? So you need to explain the value of cooperating compensation as well when discussing your comp with the sellers, right? This is especially for the listing agent. You going to tell them, hey, maybe you heard on the headlines or you saw on the news and everything that the buyer's agent are not getting paid. But guess what? If we don't offer anything to the buyer's agent, maybe we're not going to get enough offers as we would like, and not enough showings as we would like, right? So you want to expand the pool of potential buyers. Let's offer something to the buyer's agent. Okay. So still, even though the changes are saying that there will be no compensation on MLS, no commission structure there, but they will still need to get paid from either buyer side or the seller side, right? The sellers needs to still understand that, hey, maybe we should offer something to the buyer's agent. Okay. And we need to learn from our commercial real estate too. Commercial real estate have this model going on for years now. So just like how we're saying the residential side is going to have the commission, get paid from the buyer side, or it's all negotiable. Same goes for commercial. Anytime you're looking on LoopNet, or if you're looking on MLS or anywhere else, majority of the time, commission is not mentioned anywhere. You have to call the listing agent and negotiate. Hey, I have an offer. I have a solid client. This client is doing this, has been looking for this type of property. What are you going to offer me? Right? Even right now, when you see whatever commission amount that you see right now, you can still negotiate that. We have seen it with our company where trying to, other agents are calling us as listing agents and saying, hey, can you offer more? Right? It's all negotiation. So do not be shy. If you have a solid client and you feel like you can make a little bit more from the listing agent, ask. What's the worst thing they can do? Is simply say no, right? But if you just ask, maybe you can make 0.5 extra. So just make sure that you are comfortable talking about your commission with the listing agents. Okay? And you have to play the long game, guys, right? Sometimes flexibility in comp needs to be there. Please do not say that, hey, I'm only going to work for 2% or 2.5%, because you need to make sure that you are flexible with your client, right? That, sometimes the client says, hey, I don't want to pay you anything, or I just don't have enough money. Maybe it's not that client is not for you. Maybe, Saab, when you're talking to them and say, hey, I need to get paid 2%, and then Sclaren says no. Maybe he goes to Sclaren and Sclaren says, hey, I'll take 1%. Maybe he'll go with that agent. So we're going to be competing on so many different angles that we need to be flexible. Right? Maybe we understand that, hey, maybe let me drop this commission a little bit to make this deal happen, right? So the first year, starting in August, is going to be really rough for especially the newcomers. But I just want you to be prepared that, hey, sometimes you do need to walk away because that client is not ready to invest in you, or you're not ready to invest your time into that client who's not going to appreciate your value, right? Maybe especially the clients too, because this is going to be new to them. And once they go to Mr. Ali and Mr. Ali says, hey, I need to get paid, and they go to Pramod and Pramod says the same thing, I need to get paid. And then guess what? Eventually, when they go to Janet and Janet says, hey, I'm going to charge you 1.5%, they're going to say, okay, fine. I'm going to pay because this is going to be the norm. Everybody's asking for something. Okay? So not all agents are created equal. It's a tough thing to say, but that's the truth, guys. Right? Everybody has their own, pros and cons. Right? When it comes to real estate, some are great at listings, some are great at buyers, some are great at rentals. Right? Everybody's gonna have their own ways. So you just got to make sure that when the listing agent is speaking to you, they're also speaking with at least 3 to 5 different other agents regarding the same thing, and then they're gonna go with the ones that they feel comfortable with. Okay, you need to make sure that even if you don't have any experience, you need to start learning the market. If you have not sold any property, you need to start figuring out, hey, I want to serve this market, this area here. Let me start doing the research, what a single family, what two family goes for, how many properties has been sold in that area, right? So you need to make sure that you are not afraid to communicate with your client. And this gotta be initially. Please do not wait for later on, right? Anytime, so especially if you're talking to a owner directly, anytime a deal goes under contract and you're thinking that I'm going to get paid later on or talk about this later on, it's already too late. We need to have that conversation way before. When you're signing the disclosures, I need to get this commission agreement signed, so I need to know that I'm going to get paid whatever you guys are negotiated. Okay? Guys, this is a big one. I just want to make sure that, we're already in June, then July and August, things are going to be changing. So I just want you to be prepared and have that conversation with your clients. Okay? Any questions, concerns, guys? All right, guys. For some of these homeowners, they're buying a house thinking that they're going to live there for 3 years, 5 years, and guess what? They're living there forever or for a very long time. So why is that happening? Because people are not able to go ahead and afford a bigger property. So whatever property they have, they're just trying to renovate that and stick with that property for as long as possible for now, right? But the share of first-time home buyers mortgage application have increased. So these are the same people who are renting out. They're tired of renting. They have enough money saved up. They have a solid income. They're probably going with FHA or conventional loan, and they're saying that instead of paying my landlord's mortgage, let me pay my own mortgage, right? Let me build some equity over the years, and go from there instead of paying their rent. So there are some new buyers. They're not the only one who's frustrated. Even the existing homeowners are stuck, right? Same reason. They don't want to get rid of their old mortgage, right? So your starter home that you're going to be starting out, maybe it's a cozy home, it's a small home, it might become a forever home. Okay? So in this example here, a husband and wife bought a 3-bedroom, 2-bathroom, and they had a baby. Instead of buying a new property, they're saying, no, we're just going to manage to live here as long as possible. And you see that throughout United States. Okay? And some people say a bigger home isn't an option right now, right? We couldn't even able to afford to rebuy our current place. So how could even they move right now, right? Maybe they bought the property around pandemic or a little bit below or before that, and now the property value went up, the interest rate went up. They can't even afford to buy another property. Okay. So you have seen it. A lot of people want to get a larger space, but they simply don't want to leave, or maybe leave that particular neighborhood they're in right now. Okay. So what's the big picture here? First-time home buyers are taking up, their growing share compared to the current homeowners, but half of the potential sellers. This is where it gets interesting. The inventory is not increasing because the potential sellers are simply waiting for the mortgage rates to drop, right? They have nothing else to wait. They just say, hey, we're going to wait another 6 months, another year. I have this conversation so many times with different homeowners. They're simply going to wait. Can we force them to sell? Absolutely not. Unless they have a reason to sell, they'll come to you and say, hey, I have a reason to sell, and they will sell that. Okay. And roughly one third of them have been waiting to move for multiple years. And I personally think since they missed out on the COVID time, they've been waiting since then. So it's been about 4 years. Okay. And those people who bought around COVID time, guess what? They have already built equity, maybe 50,000, 60,000, 80,000 already, right? Some of them have gone over $100,000 we have seen. Okay. So if you're a realtor, you should be asking your clients or finding clients who have questions regarding a home loan. We went through our loan options, right? We have different types of loans that they can get. But just as an icebreaker, you guys should have a knowledge of those things, right? You're not a loan officer, so you don't have all the guidelines. But if they ask you for some sort of question, you should be able to, instead of saying, hey, I have absolutely no idea, you have some sort of idea, right? And if they want to invest in real estate, obviously you want as a rental properties and everything, we have loan options for that too. If they're tired of being a renter, right, you should be asking every client that's renting right now, how long have you been renting? And how long do you plan to live in that property or in that neighborhood? Are you going to keep paying that rent forever, right? Or let me help you find a property where you're going to be building some equity, right? If they're starting their house hunt, you want to be part of that. You don't want them to go to a listing agent. You want to tell them every time they go into a listing agent, they're giving up their rights, right? They're giving up some sort of right where the listing agent is already representing the seller and they're going to have everything in their favor in the seller's side, not yours. Okay. So as a realtor, you're a connector. You're like more of a plug for this homeowner, right? As a home buyer, they have no idea what, should I do an inspection or not? When should I do a survey? Which loan officer do I need to talk to? Or which attorney should I hire, right? As we mentioned, maybe a general contractor or even a handyman, right? These are things, because you're in real estate, right? You're part of housing. So all of these things that we mentioned has to do with housing. So why not be that plug or that connector? Hey, you need an inspector? Don't worry, I got you. Call Mr. Hassan. You need a loan officer? Please call Terlochin. You need an attorney? Please call Richard or Harpreet. You need a surveyor? We have Benny. You need handyman? We have Vic. We have a couple of other people. Right? You need a licensed general contractor? Well, here's a list. Right? You want to be able to respond to them in such a fast manner that they say, hey, this person knows what they're talking about, that they have all these contacts with them and they're going to help me out. Okay? All right, guys. Next, we have few listings. This is a new listing by Ersteep AP here. This is by in Lawrenceton. This is a land. It has a pre-approved, already I believe is it approved plans for 2-family, 3 bedrooms on each floor, 2 bathrooms on each floor. The seller is trying to do another project, so they want to sell this property. The lot size is 44 by 88. If you have a client, please do show this. Another one is in South Ocean Park, listed for 1.1. This has 7 bedrooms, 3 baths, also listed by AP. Okay, this is listed by Saab here in Huntington Station, 925, has 4 bedrooms, 3 baths. Okay, and this has a price reduced for our Daljit here. Sorry, did not update this. This is by Daljit in New Hyde Park, listed for $849. Okay, so guys, last few things, KV Core, Transaction Desk, your MLS Stratus, your Outlook, and your Teams. These are 5 apps that are essential to your business. You should be able to log into every one of them. If you're going to be a part-time or full-time, if you're an active realtor, you should be able to log into these. If not, please contact me so we can help you out. 1 or 2 clients says, hey, agents told me that they're not able to connect with me through our 516 number because it's our office number. If you guys want to connect with me guys directly, please send me a message in Microsoft Teams. Okay. This page here, LJ Agent, does get updated from time to time, guys. Some of you guys have hard time logging into Geodata. Your credentials are added there as well. When it comes to comps, I really highly recommend you just don't do with Atom or Geodata. Also do it with RPR. RPR gets you in more depth. It gives you maybe 10 to 20 pages. So when you're presenting it to the listing agent or even your buyer with these comps, right? Maybe you can start off with Atom, but you definitely want to do a RPR report. It's very, and it goes in very much in details. It's a PDF file, has your picture, it makes you look really professional when it comes to RPR, right? You want to do commercial listings there, you check out commercial details, you can do the same thing. Some of you guys are asking for Property Shark. That is not a shared account, so just send us the address. We can give you a Property Shark report and send it back to you. Okay? Listing guys, especially the new agents guys, right? Every single morning you should be starting off with listings, not your clients, just listings. I just want to see, hey, I'm serving this area, has there any new property in that area? And you don't need to know whole New York, you don't need to know whole New York or Queens or Nassau. Just pick your area that you really want to serve. Some people are comfortable just doing by zip codes. I'm perfectly fine with that. Just get to know your market, because your brain will tell you, hey, there's three new properties automatically. Hey, this is good for John, this is good for Smith, this is good for Mr. Khan, whatever the case might be, right? Unless you make a habit of doing this, you're not going to know your inventory. You're not going to know the market that you're going to be serving. So in KV Core listings, all MLS listings. Okay. Guys, our job as a realtor is to be under contract. 70 agents that we have, we want to see at least 50 contracts. It's definitely possible, but a lot of us are just hanging our license, and we want you guys to be active. If you're already licensed, you're paying your MLS fees, you're trying to be active, but you're not fully there. You got to take some more action, guys. Right? If you need to follow up with your clients, you need more leads. Talk to me as a broker. It's like, hey, I need help with this. We have few agencies who's telling me that, hey, they want to be a listing agent, right? Which is great. We want you to be a listing agent, but we want you to focus in the beginning, the buyer agents, so you guys know the full process. Close at least 4 or 5 deals as a buyer agent, so you have understood every different angle. Like we say, like with us, is like, you get slapped in the face 5 times. All of a sudden you like, okay, fine, I understand this now, because we had a problem. One slap comes from as home inspection, one comes in from appraisal, one comes in from the contract. Maybe the client wants to back out for some reason. Once you have closed 5 deals, you should be able to understand all the process of it. And when you're talking to the listing agent, you say, hey, I understand every aspect of buying and selling your home. Okay. Our job is to be going under contract. We're going to do that by showing, and we're going to show by only connecting with our clients with the new property that are coming on the market, right? Even if you have not got in touch with a client for 3 months, 6 months, a year now, connect with them and see what their situation is. Maybe they bought their house already. Maybe they have a referral for you. Maybe they're, the last closing that one of our agent did, I have a habit of asking, how many showings did you do for this client? He said that was the first showing. I said, how come? How come it was the first showing and you got this property under contract and, you're sitting on a large check right here? He said the guy was already working with another agent for quite some time, and that agent lost in touch with him because he thought that this client was not ready yet. And then all of a sudden, this client, our agent, picked them up, showed them one property, and received over $10,000 in commission, right? So please do not judge your clients. The best thing to do is connect with them, stay with them, stick with them, okay? We have 168 hours in a week, guys. How many are you spending on real estate activities? So let's get that. Let's be honest with ourselves and increase those hours, okay? Our loan officers, right? Our loan officers, like Mr. Tolochins is here, have closed on more than enough deals where he can help you out in every aspect of a mortgage. So if you have a client that has a question, or you might have a question, instead of reaching me or just reach out to Mr. Tolochin or any of these, our loan officers here, and connect with them, right? Ask them pick their brain with, FHA, conventional, QM, non-QM. Ask them questions. There's no stupid questions. We all learn from this, right? Just say, hey, what credit scores do I need? What income do I need for this type of loan? I'm trying to make an offer, or I'm thinking about buying a house in next year. right? Just have that conversation. How you're gonna prepare yourself. So I want our both teams, our realty and mortgage team, to be comfortable talking to each other and answering any questions that we may have. Okay. Some of you guys have or would want a plate. That's a realtor plate. I have it. I believe Mr. Hassan has it. A couple of other agents have it. If you want it, the number is there. If you want to customize it, you want to come to our office for LJ Realty, we should be able to order one for you as well from there. But you can call DMV directly and order it from there as well. Okay. That will do it from my end, guys. Any questions, concerns, comments? So the biggest takeaway today's meeting should be, are we comfortable having a conversation with our clients about getting paid? If you guys can take that away, I think it does more than enough for this meeting where you're comfortable. If you're not, talk to me. Hey, I'm not comfortable talking to my client about getting paid. Let's practice that together, right? Let's bring some value to that client. All right. If there's no questions, concerns, that will do it, guys. Thank you so much for joining. I will see you guys next time. You guys take care.
Thank you, Latif.
You're welcome, guys. Take care.
Thank you, sir.
You're welcome, guys. Take care.
Thank you.